Hello and welcome again to Stocks Advisor. Today we'll talk about Facebook Incorporated, traded at Nasdaq, ticker name FB. Well, very famous stock, of course, everyone knows Facebook. But the reason we really want to talk about it because suddenly after hours we see minus 4.04% decline. And this is a reaction of the market on actually QT report, although beating expectation, but still maybe not that much. So people are not happy, traders are not happy. And also in combination with the current candles, it looks like we might form either let's say a false correction or a real correction. We will see that the example of false correction is here in the May. We started with similar kind of dark candle on top, made a very clear descending channel, but it wasn't going too far. So just after rebounds from moving average 20, it went all the way again up. Similar situation might be happening here, but here we also have, we already touched moving average 50, so we use it as a support. And as you know, this is a classical setup for a deeper correction to start. So what do I mean? Previously, from March of this year, we had so-called stable growth regime. Stable growth regime is when a big company is having the price on top, then moving average 20, 50, and 200, and moving average 20 works as a support line. So every time this is the case, you can just sit in the position and enjoy it. And that indeed was the case here until almost happened in May. That's why I called it a false breakout. So we didn't touch really moving average 50, but almost went there. It caused some delay, but further we continued to grow. So there was no clear correction here. Similar situation, we broke this pattern, we went lower than moving average 20, and then moving average 50 worked as support. And this is usually after that you have another final jump up, so another final bounce upwards, but this is done a false growth, and you should be prepared then for a correction, for deeper, longer correction. And especially with this sticking to the top, what we see here was taking place, and in combination with this news that we have and with this decline being 1567 already, this means actually that it really might be a correction to start, because if you look at the price, we just sit in the top of the previous wave. So we sit here now after hours. Still might be tomorrow big white red candle, so we might recover till the today's levels, till 373, but then I would say the real correction will start. And if this is going to start, the very first levels where we can still test it and bounce is formed by these lines, actually by these levels. So I would really then wait for these levels before buying through. And this would be therefore 331, 33 and 341, 34. I wouldn't speak about cents here because the price in dollars is already high. So I would just say this would be between actually 331 and 341 as the first level where we might have a rebound of this bigger correction. If this is going to happen, we might rebound back to the area of here of about 358, which might make for us, let's say, up to 10, a bit maybe more, 15%. So I would be quite generous here on profit taking, and I would just say, okay, we need to take profit up to 10% of the rebounds. Don't be too greedy here, and then just take it if needed, re-enter, but really take it in time. If you are, let's say, more a shorter term trader, if you are a longer term trader, of course, Facebook in general is a nice company and it will be growing anyway. At least we don't have any major, let's say, indications here that there is kind of a stagnation or going to decline. So you might wait even for higher levels, like the levels of 373. But I would say for now, just take it 10% and re-enter if needed. So this means that the similar kind of descending channel should be starting to form here, and So we still don't know the numbers, but that maybe will be something like this with unknown angle of decline. And this would be the very first moment where we can rebound from it and continue further grow. If it will be really something deep, so if we go lower, then of course we need to be ready to buy at the second technical level here, which will be a bit lower, and this will be formed by the top of the previous height and actually this volatility moment of the previous end of previous descending channel, which will make it between almost, let's say, 300 and 316, a bit broader level to buy through, but it is what it is. So we can write it 316. So this will be so-called, let's use a call out for this. This will be so-called second technical level. So the level which we can expect if descending continues. And by that time also moving average 200 will be inside of this level. So it will be quite strong double support, and then rebounds really should take place. Then you can still make a profit 10 to 15%. I would a bit increase the upper boundary for profit taking, but in general, 10% will be the target for making profit. And as always, we need to keep into account like a negativity or negative news effect, or I call it negative catalyst effect. This is the level that we don't expect at all, but we want just to keep money to buy there if any really bad stuff happens. So if people will be exiting with numbers, you just don't take loss, you just buy more there with non-linear averaging down. We'll talk about it later, how to do it, and then actually the rebounds, you take the profit. And this would be the level between 268 to 177, a very principal level that was formed actually by March of this year. And there you can buy with actually quite high confidence and really actually to be quite safe there. So again, it will be 268 and 277. So this is so-called risk mitigation level, which we don't expect, where first two we might expect, but it's just the level where we want to keep some money to buy through if anything bad happens. And that's all with Facebook. So overall, again, a little bit to wait to see what's going to happen here. Most probably Facebook is going to a longer, deeper corrective move. It could be a single channel decline and then rebounds, could be formation of triangle. We will talk about it later, what it will be. But the first level will be, let's say, the most appropriate, and then it should be rebouncing. And speaking how to trade here, again, it's a quite classical trade, and also company is quite strong. So it's a 5-portion play. What does it mean? It means that you can buy in the first level with 1 portion. If we go to the second level, you can buy with 2 portions, and remaining 2 portions you just keep just in case if there is any unexpected negativity. Third level, although not expected at all here. And that would be it for trading with Facebook. So for now, it's hold and wait, and if descending channel takes place, just follow this advice. If you like this way of trading, of course, you are the boss. And in general, if you like this way of trading where we don't talk about any stop loss, but we talk about making profit and buying lower levels non-linearly and exiting with a profit or with a draw in a worst case scenario. So don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. With this being said, that's all for Facebook, and see you at another episodes of Stocks Advisor channel.